The market sold off aggressively on Thursday with stocks, gold, Bitcoin, and even dollar yen extending its slide. All of this is centered around concerns about the U.S. economy as well as concerns about the real estate sector, along with the AI boom being overextended and causing damage to other sectors of the economy. Now, this week's U.S. data was really mixed. We had weaker retail sales, stronger non-farm payrolls, weaker jobless claims. On Friday, we have the U.S. inflation report, the last big piece of U.S. data on the calendar. Unfortunately, I don't really think it's going to change much for the markets because in general, the inflation numbers should be a little bit more subdued, indicating that the tariffs are not having too much pain on prices. But at the same time, the Federal Reserve is not in the position to cut interest rates at all until, maybe June at the earliest. Now, in terms of what to expect in the coming week, we do have less focus on U.S. data, although geopolitical headlines continue to remain front and center. For the FX calendar, we have things like the Reserve Bank of New Zealand rate decision. We have Canadian retail sales, Canadian inflation data, we have UK job numbers, and from the Eurozone and UK, the most important reports will be the PMIs. The US, it's more ancillary data like Philly Fed, jobless claims. So the focus will be more absorption of this most recent reports we have from the US, watching how the risk appetite in the market is and whether it continues to sour, and that will affect all asset classes, and of course, data from the rest of the world. I'll try to keep my best to keep you all updated. I'm Kathy Lee with BK Traders.